The question is around whether Bitcoin is classified as the next sort of digital gold, and a lot of sort of discussions I've had last week was just in regards to how Bitcoin compares to gold, as well as how we can help when it comes to leverage through our perpetual account for Bitcoin. But to give you some sort of comparisons, I mean, Bitcoin, for example, has about 400 billion worth of daily volume, so liquidity during the day, compared to FX, where it's about 7.5 trillion on a daily basis. So there's a lot more liquidity with FX, for example, and in order to get in and out of gold positions, it's very liquid, so it's very easy to get in and out, as well as it doesn't impact the market so much compared to low liquidity. Previously, we've also seen Bitcoin is actually a more high risk, high reward, which is tied against the Nasdaq in previous sort of trends. So there is an increasing correlation between both gold and Bitcoin. So more people kind of swapping in between both as a sort of asset. But I would say that Bitcoin is still classified as a risk-on asset, while gold is a risk-off as a safe haven. Within Bitcoin, it's still being tested. So throughout time, gold has existed since 4000 BC. So compared to gold, Bitcoin really hasn't been tested. Plus, obviously, the practical everyday use of gold when it comes to jewelry, coins, etc. While Bitcoin's only payment. The advantage that I guess with Bitcoin is that there's the supply is limited. So there's a 4-year halving where basically there's a reduce in the actual current market cap, and gold is still being obviously mined throughout. So there is those sort of comparisons. I still personally think there's a long way till we can call Bitcoin as the next sort of digital safe haven asset, but there's a lot more people basically including Bitcoin when it comes to their sort of portfolio, so a certain percentage. And with traders, it's all about making sure you've got that relevance of risk management strategy in place to ensure you lock in any sort of profits.